What's going on YouTube? It's Shaq and we're back at another episode, number 4 of No Secrecy Agreements. Today I am going to go over long-term versus short-term vehicles when it comes to investing. First and foremost, I'm going to tap into what I first got into, which was real estate. Real estate was what allowed for me to now exponentially grow my wealth and gave me tricks and switches of how and why I did what I did. Now, first and foremost, real estate is any property, and they call it real property, of a house, an apartment, a condo, a mobile home, a manufactured home. That is a form of real estate, along with, you have skyscrapers, warehouses, storage units, and land itself is a form of real estate, right? Now, I began my real estate journey as a wholesaler. A wholesaler is just basically someone who finds a deal, gets it from a seller, the person who owns the property, then adds $100, $200, $1,000 to the fee, and then finds a buyer to buy the contract for them. Now, I did that a bunch of times from 2022 to 2024 and made a great deal of money. And that allowed for me to not only know what a deal looks like, but meet people who either flip properties, or they were lenders, or they did private money lending as well, or they were just people who did what I did myself, which is wholesaling. Now, I think the importance of understanding short-term versus long-term vehicles. Wholesaling is a short-term vehicle. And what I mean by that is, it's not one of those things where you can do it once and it pays you residually, right? It's a short term and it's a very transactional situation. So once I get something under contract, I find a buyer, that buyer buys the contract, that's done once it closes. I then have to go on to the next one. Similar to flipping, right? When you get a property, when it comes to flipping, you are the buyer that's buying from the wholesaler. And from there, once you buy the property, you have a certain amount of time to flip it so it can be profitable for you. Now, for instance, I, as a wholesaler, could have been like, oh, I have this house for $10,000. I'm going to sell it to this buyer for $15,000. The buyer then buys the property and pay me with $15,000. Now that buyer is all into that property, $15,000. Let's say the property is worth, fixing up is costing the rehab another $30,000. So he's all in $45,000. You have loans that you're holding and so forth, paying contractors. He or she may be all into that property for $50,000. Now, the property is worth $120,000. So after 60 days or 2 months, that property goes on market for $150,000. And me as a buyer, it's only all into this property $50,000. When I sell it at $150,000, I still have to pay closing costs, pay commissions and so forth, realtor. I'm probably all into that property a good $60,000. Now, I just walked away with a $90,000 check. Now, with no difference between wholesaling and flipping, now flipping, you'll have a longer duration in order for you to get paid, and you get paid more, right? So short term, wholesaling can get done in 30 days, sometimes in weeks, and you get paid. Flipping can happen as short of maybe a week or 2, depends on how much you need to get done with the rehab, or if there's any rehab at all, or it can take a year to flip a property. So now we're getting to the moderate stage. And what I prefer now, which I love flipping or renovating a property, but it's really the money and the investing is in buying rentals. However, with buying those rental properties, you can still use both of the strategies of wholesaling and flipping, because being able to find a deal, you learn that through wholesaling. And finding a deal and being able to fix up that deal, which is called add value, right, is something you learn with flipping. So now what I do, right, because right now I have a deal under contract in Beaumont, Texas. It is a 4-bedroom, 3-bath property. It's 3,000 square feet. It needs to be a rentable space, $5,000 to make it rentable. It's going to cost me $10,000 to acquire that property. It rents out at $1,750 as is. Once I get new flooring into one area of the property, clean it up, deep clean, paint inside and out, that property will rent out for $2,200 a month, which then gives me about a $600 cash flow after paying all expenses, cap rates, property insurance, property taxes, and XCAP. So me spending $10,000 allows for me to make $6,000, not even including my depreciation of $36,000 each year because it's an asset, and the appreciation of that property over the next 5 to 10 years. So when it comes to long-term investing, buying and holding is the best way to go about it, because you get the tax benefits, which I spoke of. You are able to have appreciation over time, which is depending on where you're at. California houses appreciate 7% a year. Houses in Texas appreciate 5% every year. Houses in Ohio appreciate 3% every year. So if I bought a property in Ohio for $100,000, that means by year 10, it would have appreciated to $130,000. Now, understanding there's nothing wrong with a short-term investing or long-term investing. I use both. Some people just use one. But the reason why long-term investing usually beats out short-term investing is because you have compound interest. You have the ability to put money somewhere and allow for it to grow, annually grow and flip over time. When you're short-term investing, you do not get the appreciation. You don't get the compound interest, which means you would have to do 3 to 4 times the value to even keep up with long-term investing. Not saying you can't use the money from short-term investing to dump into long-term investing, which is something I do. Some properties I wholesale, and I wholesale and take that money to buy other properties. Or the money from wholesaling allows me to now upkeep my properties as well. So the money is flowing in the cycle. Now, there's other asset classes that I really want to speak on because we're in a crazy crypto bull run right now. And crypto is very volatile and it's short term. It's more volatile than options. So if we go on to tiers, long-term investing is stocks. You're buying stocks, you're holding it, and year after year after year, you're seeing dividend or you're seeing the growth. Options are usually a year long max. It's very few people that are doing 2-year long or 3-year long option trades. The delta doesn't usually make sense for the long term. And then you have crypto. And crypto is like options on crack. It is a whole nother level. Like you can make money, $100,000 in 1 minute and lose all of it in 30 seconds. So I need people to understand, unlike real estate where you can start short-term investing and you can work your way up, I don't advise anybody to go from memes and then go into trading. Don't go for memes. And then it's like, yo, I'm gonna then start buying options. I'm not options. I'm then gonna start attempting to buy stocks. I believe you should go into stocks. You should buy stocks that you have. So, and my wife told her to buy Starbucks because she likes Starbucks. Told her to buy Lululemon because she wears Lululemon. Told her Dutch Bros as well. Apple because we have Apple products. Buy what you know. Watch them. And invest in S&P 500, but watch those in time. And then you start understanding strategies. Oh, when it dips under 10% of its all-time high, buy. It keeps dropping, buy more. It keeps dropping, buy more. Oh, wait, it's rising up. I let my money do what it needs to be done. You always buy on the dip and you let it rise when it hits its peak. If you don't understand those fundamentals of stocks, meme coins is just playing parlays. You're just playing parlays and gambling. So, for instance, opposite to real estate, where you can go from short term to long term, with investing in stocks and crypto, you must understand the basics. Because meme coins are not going to teach you the basic. Option trading doesn't teach you the basics of stocks and investing in stocks. So it would behoove you to start with stocks that you know, invest in them, understand them, see some of their trends over the last year, 5 and 10 years. And then you get a better understanding like, oh, I'm willing to now do a option trade or a call, which means I believe it's going to go up, or a put, I think it's going to go down. I'm going to play with those two things because now I have an understanding and a baseline. I can start doing options to trades or stocks that I've been very much aware of over the period of time. Now, we have our last asset class, which I always say. You have real estate, you have stock. And our last asset class is things like art, gold, precious metals, and gemstones. Those are things that have its current value because we have placed it to have such. And like a ring, a diamond. Diamonds are very much plentiful. It's hard to find them if you went out into the world, but I can go to a store right now. I can go to the mall. I can go down the street and buy a diamond. So gold is another precious metal that you can buy that has intrinsic value because you can trade it. Art, you can trade art. Tennis shoes are getting to that point where if you have a dead stock tennis shoes, you can now trade that shoe for something valuable. And those things go up and down. They're very cyclical as well. So the moment you jump into investing, you'll get a better understanding on what holds value and what doesn't. Now we can talk about Bitcoin and Bitcoin. Bitcoin is not a storage of value similar to gold, but it's a digital currency. The dollar is starting to drop. So you don't want to have anything in a dollar. So you want to put your money in assets, real estate assets, stocks, Bitcoin. Those are assets. Gold assets. Diamonds are falling off from being assets because you can have lab-made diamonds, which is like literally 10 times less, but look exactly the same. And that's a problem with certain things. So what I'm getting at is, once you understand investing and you break down these asset classes in these markets, you'll start to see trends. When one is up, the other is down. When both are up, you should be very much aware. So one last thing, my brother, his favorite investor is Warren Buffett. Warren Buffett said this: when everyone is greedy, be scared, and when everyone is scared, be greedy. And my friends, right now, in this market that we're in, it is time to be greedy. Have a blessed one.